We've had a couple of comments talking about how to take profits. One of the big mistakes that investors make, and particularly younger investors when they're managing a portfolio, is they tend to go to extremes. In one direction or the other, they tend to overweight assets in their portfolio. Like something's working really well, so I just kind of go all in on that particular asset or that asset class or that theme of assets. And as long as it's working, it's great. But what happens is that we become overconfident in our abilities to invest, and we believe that we're actually smarter than we are in terms of the markets, and the markets have a really nasty habit of sucking everybody into a particular asset class, and we get all these narratives about why an asset class is going up, why Beyond Meat is surging, so it's going to come back from the dead. No, it's not, but that's what happens, and then of course you get the ultimate rug pull, and then prices reverse fairly sharply right after you buy it, right? So you tend to buy peaks, and you typically wind up selling sell-offs. Don't do that. Managing money is not all in or all out thing. Diversification is very important. And just learn to manage risk. Markets have had this huge run. Markets are getting very overbought again right now. But at the moment, everything's fine. But at some point here over the next few days, we get through earnings here this week, maybe next week, markets are going to get more extremely overbought potentially. And you're going to be set up here for corrections. We'll start talking again about, hey, time to rebalance risk, look at your positions in your portfolio, remove some capital. And that's where people tend to make a mistake. It's like, oh, well, Lance said take profits, so I'm going to go sell everything. That's not what taking profits mean. That's an extreme move. That leads you to sell high and wind up chasing markets, trying to get back in, and just a lot of mistakes. A young gentleman emailed me and he's like, hey, I've been out of the markets this year because I couldn't watch it, and I've been waiting for a 5% pullback to get back in. And it's like, well, what happened to the 20% pullback we had in April? He didn't get in there because he thought the market was going to have a much bigger correction, and we're starting the big sell-off because of Liberation Day, and then markets come roaring back. And again, this is always the problem, is that once you're in cash, it's very difficult to get back into the markets. Two things here about managing risk. One is it's not an all or none game. It's not being all out or all in. That's market timing. That never works. Second thing is that once you're allocated, all you want to do is just navigate the portfolio. Build a portfolio to weather market volatility. So in other words, you're going to have some defensive positioning, you're going to have some offensive positioning within your portfolio. And so no matter what goes on in the markets, you're going to have the ability to kind of weather that storm out when it occurs and navigate the bull markets when they're happening. And all you want to do is just steer the ship. So as you're kind of going, you're just nipping a little bit here, you're tucking a little bit there, you're adding a little bit over here, and adjusting the allocation to move along with the markets.
Catch me daily on The Real Investment Show. The link is in the description.